Okay. Question 16 in your manufacturing accounts, which is practice 5.18 onwards. Visual Products is an organization that manufactures sports equipment. The business's most recent financial year ended on 31st August 2018. The owner of the business is Rakesh Somaya, who has provided the following information. So these are your inventories. So as you can see, this business is not a new business. It has an opening inventory and a closing inventory. For all your raw materials, work in progress, finished goods. If you are to prepare a manufacturing account, just remember finished goods should not be inside. Finished goods only appear in your trading part of your income statement. Manufacturing account requires your raw materials as well as your work in progress. This is your opening balance. This is your closing balance. Remember that your closing date is on the 31st of August 2018. So some of you might find this a little bit more difficult than others because it's not January 1st to December 31st. This is still one financial year. For the year ended 31st August 2018, direct factory wages, this one needs to go to your manufacturing account. Factory running costs, manufacturing account. Factory supervisor's salary, yes. Manufacturing account. Purchase of raw material, yes. Revenue, no. Revenue will go into your income statement because this one has nothing to do with your cost of production. And then you can actually see that there are a few adjustments that you need to do. Direct factory wages, 2,400 was due but unpaid at 31st August 2018. So this 2,400, you need to add it in to this direct factory wages here. And then you should see that there is a depreciation should be provided on factory plant and machinery at 20% per annum using the straight line method. Straight line method meaning that the cost of the factory plant and machinery was 270,000. So what you need to do is take 20% of this, and that is your depreciation charges. It will be charged in your manufacturing account because factory plant and machinery is used to manufacture your product. Question A, explain to Rakesh Somaya the reason for preparing a manufacturing account. So now you need to tell him what is the reason for preparing a manufacturing account. So all you need to do is to say that the manufacturing account, let me just type it here. Yep. Okay. Manufacturing account is prepared to calculate the cost of production. This amount will be required to calculate the cost So it acts as like your cost of goods sold section, whereby since you're manufacturing, this amount will be used to calculate as your cost so that you can calculate your gross profit. Gross profit. By finding the difference between the revenue and the cost. After adjustments of inventory. Okay, so now we need to change this to our manufacturing account. So for B, prepare a manufacturing account for the year ended 31st August 2018. So we need to prepare our manufacturing account based on all this information here. So now let's look at your manufacturing accounts. So first, we need to see our raw materials consumed. So let me just reduce this in size, which I don't really need it that big. I can put my manufacturing account closer. So my manufacturing account will start with raw materials, consume, opening inventory of raw materials. So just change it here. Add purchases. Of raw materials. Here. 2,500. And then you get your amount, which is 130,300. So once you get that amount here, if there is a carriage inwards, then you need to add it in. If there's none, then you don't need to add it in. After that, you need to less closing inventory for raw materials. Remember to put it in a bracket. And then you calculate your amount here. 7,004. Okay, once you're done, and then we need to include our direct labor. So you need to find your direct labor. Do not include your work in progress until the end. So now we need to find direct factory wages. Direct factory wages will include 75,600. You need to add the one that was due, 2,400. So we need to see the total would be 78,000. So once you add all these things together, you should get something called your prime cost. So your prime cost should add up to 165,400. Double check. Yes, so this is your prime cost. Once you reach your prime cost, you should be able to score about 40% of the mark. Then after that, we need to add all our other expenses, which is our factory overhead. In your factory overhead, there are a few things that you need to do. Like for example, your factory running costs, your supervisor salary, that was it. Oh, one more thing, depreciation. Okay, depreciation of plants and machinery. You need to show your calculation, but most of the time you don't really get scores for this. You don't get extra marks for showing your depreciation calculation. 20% of 207,000. That's that. So your factory running cost. So I need to add one column here. So my factory running cost is 27,300. Supervisor salary 32,400 and 54,000. So this one I add up together should be 113,700. So sometimes you will put this here and then you will think that, oh, I need to minus this amount. Well, no, you need to add this amount because you need to add your factory overhead. So when you write this here, it will double confirm that you need to add the amount instead of minus, because this one looks something like your income statement and you feel like you need to less expenses here. But this is not. This is your manufacturing account. So you need to add these two together, you should get 279,100. After you get it, this is where you put in your work in progress. So if you look at your changes in work in progress, you can see 5250 to 4790. There's a decrease in your work in progress. It means that you have completed more of your finished goods. So add opening work in progress. Let's put it in work in progress 5250. Add them together, you should get 284350. Once you get that, then you need to less closing work in progress. Which in brackets 4790. 279,560. So once you're done with this here, this is what you call your cost of production. Means this is the end, cost of production. Yeah. So this amount will be included inside your income statement. So if you look at question C, they ask us to calculate the business's gross profit for the year ended 31st August. Show a detail of your calculation. So since this is a very simple one, I can just show it to you. We only need to do the trading part of your income statement. So income statement, I just need to use your revenue, means your total sales. Let's just put it here, 440,000. So remember, you need to less your cost of goods sold. So here, instead of less of cost of goods sold, you just say less cost of sales. This is a better term. So now you just need your opening inventory. Same thing, but just opening inventory for finished goods. So opening inventory for finished goods is 39,600. And you add your cost of production. So in case you calculated your cost of production wrongly, but you actually took the figure from your manufacturing account, you are still awarded the point because your concept is correct. Okay, so just put 279,000 there, you add them together, 319,160. You get that amount, and then you need to reduce your closing inventory. Finished goods. Which is, let's put here, 32,700. This amount will be on your right. And then you just draw a line to show the calculation. This amount will come here. Remember, we are reducing our cost of sales here. So we need to put this in the bracket as well. 286,460. And at the end, we will get our gross profit. This minus this, 153,542. So, gross profit. Okay, if there is anything after this, you'll be less all your expenses, so on and so forth, to get your profit for the year.